You're watching Captains of Industry here on CNBC Africa. I'm chatting to Nick Holland, the CEO of Goldfields. Nick, thanks so much for your time. Let's take you back a while. You've been with Goldfields for most of your life, and you've been 25 years in the gold mining industry, 26 this year. The transition from CFO to CEO, I know that it is a while back now. You know, we're looking at 5 years plus. Was that an easy one, the transition?
No, I don't think it ever is. It's something that one has to evolve into. I don't think you suddenly change your thinking about everything from one day to the other. So it's been an evolution for me over this period of time. But I guess the one thing that was on my side when I took the job is that I've always been very operationally focused. So I've spent quite a lot of time, even prior to taking over as CEO, at the operations, understanding the business, and it's something that's always interested me. Strangely enough, although I come from a financial background, my real passion is the mining side, so that really helped me a great deal and gave me a good grounding, because there's no point trying to understand the financials if you don't understand the business behind it.
You've been quoted a number of times as saying that you love what you do.
Absolutely.
Can you elaborate on that?
I love what I do. I enjoy the business from the point of view that you interact with so many different stakeholders. There's so many different facets to our business. It's a high-profile industry, as we all know. We read about the mining industry in the papers all the time. It's a global industry, and we know a lot of the people in the industry. It's a fairly close industry. And the fact that it can go from boom to bust and back again, I think makes us focused all the time. Now, you can get into an industry where you have a captive market, the sales pour in, and then the question you have to ask yourselves is, how do you get bigger and bigger, and have you got too big? We never have those challenges in the mining industry. And I think at the end of it all, you're trying to figure out, well, you know, where is the next mine coming from? Are we going to buy it? Do we think it's somewhere in the portfolio? Will we actually find it on one of our existing leases? So it's the thrill of the seek, of looking for new opportunities, new frontiers.
You mentioned, Nick, that you go through boom and bust cycles, and I think that's very relevant in the commodity environment. Gold mining, particularly in South Africa, has been under pressure, notwithstanding that you are a global company with global operations. The pressure that you've been under from a performance perspective, is that difficult to deal with? You have analysts on a regular basis criticizing the company, looking at it and in relation to AngloGold Ashanti and saying you're underperforming. How do you deal with that criticism? Do you just brush it off at this stage?
I don't think you can pay much relevance to it. I think the one thing I've learned in this industry, and particularly in this job, you've got to do what you think is right. And you've got to have the conviction to follow that through over the longer term. The other thing is, the sell side are often focused on, you know, this quarter's results, whereas often we'll have to make decisions that we'll only see the benefits of down the road. So they tend to be more short-term focused in their thinking. You can't really pay too much attention to that. If you do, I think you'll run your business to cater for what they want. And, you know, let me go a step further. The shareholders. The shareholders are important, and we need to make sure we understand their concerns. But if you play to the whims of a particular shareholder who might have a fairly sizable stake, you run the risk of changing the business to accommodate them, and then you wake up the next morning and guess what? They sold out. And then you're still here. So yes, you've got to run the business for the benefit of all stakeholders. Shareholders, like everybody else, are a stakeholder, but you've got to do it right.
It's one of the issues of being a listed company, and twice a year you're going to find yourself on the road engaging with those shareholders.
Yeah.
Has it been a difficult process over the last couple of years, every interim results period and every full year results period? We're going to chat about South Deep, but they're expecting that to come online and for quicker delivery.
Yeah.
Do you feel pressurized at those roadshows?
No, I don't, because first of all, I think we have to look at the company overall. This is not a one-trick pony. This company is made up of 7 other mines. 90% of our production and all of our cash flow is coming from outside of South Africa, 7 other mines. We've taken Goldfields from losing around about $300 million a year to making $300 million a year. That was last year. Despite having to carry South Deep, which is still very much a project. And I think that's part of the challenge, is that a lot of people don't realize that South Deep, in fact, is a project that's building up.
Why so much focus on South Deep? Again, I look at a Financial Mail cover that was done in May 2014, and the article focused on the South Deep. You were quoted as saying that this is a Ferrari operating in low gear at the moment. There is the hope that South Deep is going to be a value unlock for Goldfields ultimately. Or is too much being made about it?
Well, I think also you have to remember the local press over here and the local media are somewhat parochial. They really understand the local operations. They understand very little about the fact that we're the second largest producer in Western Australia, third largest producer in Australia. They understand very little about the fact that we are the largest gold producer in Ghana. And in fact, when we managed to persuade some of the sell side and the investors to come up and see those operations, they're blown away. So I think a lot of it comes down to local understanding. But the other thing is, in some respects, South Deep does represent an important part of the portfolio. And we need to make sure that we optimize the significant investment we've made. We all know that we've invested between the purchase and the capital we've invested around $4 billion. You know, that's more than the market value of Goldfields today. So it's a sizable investment, and clearly we've got to get a return on our investment over time.
What timing have you given to the market in terms of realizing South Deep's value for the organization?
What I've done at the moment is I've taken timing off the table to go back and reflect on where we are, to address the base. You know, is the base right? Do we think we can get to 700,000 ounces a year? Is it going to be a lower figure? Is it going to take longer? So I've deliberately gone around to all of the shareholders over the last 12 months and said, we're taking long-term targets off the table. Here's the reasons. We're going back to the basics, and we'll come back to you when we've built more confidence. That's been fairly well received by the long-term investors who have been in us for a long time. With one caveat, they're saying, show us the pathway. You know, what are the key barriers to success, and what are you doing about addressing them? So we'll be going around again in August to give more update on that. But I think there's a greater understanding, and I would say a greater feeling of sense coming into the view of the company, being more cautious. It doesn't change our view on the asset. You know, the one thing that's for sure, it's a great ore body, and we've capitalized the mine extremely well, but we just haven't delivered the productivities we should have.
I am going to focus on Western Australia and also on Ghana a little later in our conversation, but I just want to stay with the local context and deal with another issue, and that is Sibanye Gold. Goldfields obviously unbundled what they deemed to be non-core assets, and Sibanye has done incredibly well. So again, you've got the local context where analysts are going, but hang on, how could Sibanye have turned these assets into performing assets? Did you miss a trick?
If you go back to my rationale of 12th of November 2012, when I did a presentation in this very room, what I said to the investors and the analysts is that we felt that there was greater value to be derived for the Goldfields shareholders by creating two separate companies. One made up of mechanized mines, which are focused on the long term and including a much greater international footprint, and the other made up of conventional mines, labor-intensive conventional mines, which are more mature in nature and require a different focus. And we wanted to create two separate companies. We believed that we would liberate the management of those assets, and those were the words I used, liberate, by putting them in charge of their own destiny and their own cash flow, because they were making substantial cash flows for us at the time. So we took the decision to actually create a separate viable entity while it was still viable. You know, we could have kept those assets and kept on taking the cash from those assets to invest in international growth, into South Deep, but we felt there was better value to be created by creating two separate entities, and so we unbundled it to the shareholders.
So you've actually unlocked value for shareholders through that transaction?
Massive. I mean, if you look at the combined value of Sibanye and Goldfields over a weighted average time period, you can never look at one point in time. What you'll see is over the last 2 years since we did the unbundling, the combination of Sibanye and Goldfields has outperformed the entire gold industry and the gold price over that period of time. So it has unlocked value at a time when companies were coming to shareholders, please give me money. We actually gave money back. We gave a script dividend back to shareholders. The other important feature for us is that we wanted to focus on building a Goldfields of the future. Now, Goldfields of the future is going to be modern mechanized mining. That's what the government's talking about now in terms of initiatives in the mining industry.
Well, you're the second largest mechanized gold producer in Western Australia. So let's move further afield.
Right.
Your international aspirations, the Goldfields of the future that you speak about, what does it look like?
What it looks like is it's going to be a company that is more diversified around the world. It's going to be a company that looks to buy more of what it's got internationally. I say buy, if we can buy, and we've been successful in 2013. We haven't done anything lately, but we keep looking. We'd love to add something to the existing assets in our existing leases. We think there's tremendous value to be gained just off the existing leases that we're on. They haven't been properly explored. And if we could add another 2, maybe 3 mines tops to the international grouping, maybe get it up to 2.5 million ounces, below $1,000 an ounce all in, that would be a very nice portfolio in its own right.
Ghana and Africa. Is Ghana for you the beginning of broader exposure across the continent?
Yeah, we do see Africa as a hunting ground, particularly West Africa. We'd be looking to expand within the West African hub. You know, that's where we are. Countries in and around Ghana, Ghana itself. We've been in Ghana for 23 years. So we've been there pretty much before most of the other companies like Newmont and AngloGold came in. So we've been there a long time. We see that as a good place to expand and in and around it. I think the potential to use our skills base there is good.
Why have you held back on that expansion to this point? If you've been operating in West Africa for such a long period of time, you could have had first move advantage in any of those territories, or has it been a conscious decision to hold back on further expansion into West Africa?
No, it's finding the right opportunities. Finding the right opportunities is hard. And I think that speaks volume for where the gold industry is. You know, you look when assets are now coming up for sale. I mean, the gold price is pretty depressed at the moment. And yet, we've seen 2 examples recently where assets have fetched prices that are higher than the net asset value. Now, that is strange, but it tells you something, that it's hard to find opportunities out there. So yes, we've been looking, but we haven't found what we want yet.
So let's talk about the gold price. I remember in my earlier days as a journalist, I asked the CEO of a copper mine what he thought, where he thought the copper price would be going, and he came back pretty hard and told me it was irrelevant in terms of the discussion we were having, which still weighs on me to this day, because you know, I know there's not much you can do about the gold price, but it must be certainly a discussion point with any miner. When you are mining a commodity, that gold price has to be part of your discussions, whether you are taking into account analysts' forecasts, your own forecasts. What are your thoughts on the gold price?
Well, I think first of all, if we thought the gold price was going to stay at $1,180 per ounce, we may as well harvest what we've got and shut down the operations in 5 years, if we thought that.
It would just give you such a dire outlook.
Exactly, because the replacement cost of an ounce of gold today is probably $1,400–1,500 an ounce. And we're not replacing what we're mining. We have to remember, we're not an industrial concern. Gold is finite. When you mined it, you've mined it, it's gone. And so the industry is mining something like 70 million ounces a year and is not replacing it. The exploration has been cut year after year for the last 20 years. The peak in gold exploration around the world was in 1995. We're not building new mines, we're not exploring. What does that tell you? We're not going to change that.
It's demand and supply at the end of the day.
That's it. And a lot of people say you can't judge gold in that context. You can. It may just take longer, because when supply dwindles and when demand keeps increasing, as we expect it to, principally out of China and India, then eventually something has to give and the price has to go up. So gold will go up.
Is it going to be in time for your operations specifically? Will the gold price rectify quickly enough for you to reap the rewards?
I think we'll get some of the rewards. I think the industry will be in hiatus. What we do then is, coming back to your point, I agree with you. You have to actually plan your business on some gold price. And so we've said, well, let's use $1,300 an ounce as a long-term price. Do I think that's the long-term price? No, I don't. But I want to use a floor so that if we make investment decisions and we base them on higher prices and it doesn't come through, then we are in trouble. Then we're back to the shareholders for money. If we base it on a reasonably conservative price, and I think 1,300 is still conservative, then we can still grab the opportunity, but we're not going to break the bank. So that's how we try and balance it.
I sat down with Graham Briggs recently from Harmony, and we were chatting about the wage negotiations. Sorry to bring us back to the South African context, but we're back into negotiation periods, and he was very clear that in his view, this is an incredibly watershed moment for the country, and will set the stage not only for gold miners, but for mining and for other industries going forward. How do you feel going into this period?
Well, fortunately, we've done our deal. I don't know whether you're aware, but Gold Fields actually broke away from the traditional centralized bargaining position of the gold industry that's been followed for years. We broke away and we concluded our own deal, which we signed in April. And we've also done a 3-year deal for Gold Fields. And the reason we've done that is because we're the only fully mechanized mine in the country. We have a different skills pool, and we have a different universe where we get those talents. We don't recruit our skills from the gold industry. We actually recruit them elsewhere because the rest of the industry is conventional.
Was this a difficult decision to get to in April, or has this always been part of the planning?
Well, we were thinking about this when we did the negotiations 2 years ago, that a centralized approach for us wasn't always the best way. We thought about it, but in the end we decided to go with the industry. But we also agreed that we would analyze the effects of our decision. So I've been in discussions with the gold CEOs since last year and indicated that we were considering other options. So we did tell them we're going to go it alone this time. I think there was understandably some concern. What does it mean for them in terms of their own negotiation? But at the end of the day, I think they understood with some reluctance our decision and the reasons we did it. But they are concerned, obviously, about what it might mean for them.
The analysis that you're doing right now, is it too early to tell?
It's too early to tell, except to say that we've not been able to recruit the right skills at South Deep.
Which is why you brought in those skills from Western Australia.
Yeah, and one of the reasons we couldn't recruit them is because our pay package was not competitive. And one of the areas we have to recruit from is platinum, who have more mechanized experience than gold. And now we've got packages, I think, that are competitive. And I would say over the last 2 months, we've brought in around about 60 or 70 middle to senior management who have just the skills that we need and that have been sorely lacking in South Deep for the last 3 or 4 years. So it's early days, but I think it's helped us to get those people in.
You've spoken extensively about a skills exchange program, if I can use that terminology, with Western Australia when it comes to the mechanized environment. Is that underway, where you're taking skills from South Africa, placing there for 6 months, bringing back, or are you just establishing that process?
It's not really worked that well, to be honest. And bringing in 20-odd Australians into South Deep was not met with universal acceptance.
As you say, there was some criticism out there.
It was certainly criticised by the government. It was criticised by the unions, and I think internally it was seen as a bit of a threat. Now, we're not the only company in the mining industry to have brought Australians in. I actually did an analysis afterwards and found out there were 13 mining companies, in fact, who've done this, including us. So we're not the only pioneers.
So have you shut down the exchange program?
Pretty much for now. We've still got about 4 or 5 of the original contingent from Australia that came here. They're doing quite well. And we have sent some people over to Australia, and I think that we'll continue to do that. But I think it'll be on a smaller scale and it'll be more targeted. One of the things we are doing is we are bringing some senior skills on a consultancy basis from Australia here, to look at things like rock mechanics, mine design, and that's working quite well. So we'll continue to try and transfer best practice.
US Exchange and Securities Commission, where are we on that issue?
No further update other than to tell you that their inquiry continues. We do not know where it's going to go.
Does it cause you sleepless nights, the uncertainty?
Look, I think we've got to the point now where the investigation has been announced for, it's 2 years. My main concern and the board's main concern was it going to impact our business? And was it going to impact our ability to borrow money, to conduct business, etc.? And one of the big tests is when we rolled over a $700 million syndicated bank debt facility with 15 international banks. They are all very comfortable. They got through it. And I think by and large now, people are just more inquisitive about it, more than anything else. But that said, I can't tell you when it's going to end.
So there's no clarity?
No clarity.
Nick, we've chatted extensively. You are on the ground, operating on a day-to-day basis. What have I missed in terms of the gold story?
Well, I think what you should chat about is the fact that Gold Fields has been able to respond well to the drop in the gold price. Last year, we were one of the top cash generators in the universe of gold companies. We made from our operations last year $235 million. How many companies in the gold industry can do that? When the gold price has declined so much, I think in terms of the gold space, gold is becoming scarce, as we've said. Now, 10 years ago, if you said that, people would have said, you're crazy. There's 10 years of global supply in the central bank vaults. How can you say gold is becoming scarce? How much of that has come loose? Very little. Banks are buying, not selling. So I would say the dynamic for the gold industry has changed, but I think it's going to take another 2 or 3 years for that to be felt in the prices.
So you've been at the helm, and we started out the conversation saying you'd made the transition from CFO to CEO. That was in 2008. So this is 7 years into your story as the boss at Gold Fields. For you personally, you've got the energy, the passion for the industry to see this through for the foreseeable future?
Look, as I mentioned earlier, I enjoy what I do. I'd love to keep doing it for as long as I can. And I think the one outstanding piece of business that needs to be sorted out is to get South Deep back onto the right footing and to get the investors to believe. I think if we can put that on top of what we've done elsewhere, I think Gold Fields can be one of the best companies in the space.
Is that your biggest priority right now, South Deep, and bringing that to value fruition, the ultimate value unlock for shareholders?
I would say 2 priorities, is that and the need to continue to grow the international portfolio and build on what we've done. When I became CEO, we only had 1.1 million ounces of production outside of South Africa. And in South Africa, we had something like 1.5. Now we've got 2 million ounces of production. In 7 years, we've managed to nearly double it. And we'd like to take that a bit more, but not to an unmanageable level. I want Gold Fields to continue to be run like it's a small to intermediate company. And then, yeah, let's get South Deep at least into cash positive territory. That will be a great achievement from here.
Nick, thanks so much for your time. I've been chatting to Nick Holland, the CEO of Goldfields, and you're watching Captains of Industry here on CNBC Africa.